All right, I want to get your take on JB Hunt first. So beats on the top and the bottom line, also announcing a stock buyback, but pricing, it does remain under pressure.
Yeah, absolutely. So, as you noted in your introduction there, no question, transportation stocks have been under pressure. They've been out of favor with investors for a long time. We actually think that's a compelling opportunity to enter the space. And the reason for that really is that valuations look reasonable if you think about what normalized earnings could look like for a lot of these names as you look out a year, 2 years, perhaps into the future. You showed that chart of pricing moderating or pricing declines kind of moderating. We think that reverses into next year. And again, if you look at systemically, there's been too much capacity in the transportation network. Mm-hmm. We think that's in the process of rationalizing. As it does so, we think there's quite a bit of upside to earnings.
All right, JB Hunt, a big trucker. We're going to get back to trucking in a second. Rail earnings also kick off today, CSX after the bell. We get a little bit of insight into the rail business because they put out status reports every week, kind of giving us a sense of their traffic. So according to those reports, I'm looking at CSX. In Q3, their traffic was up almost 2.5%. Seeing some other players, Norfolk Southern up almost 7%, Union Pacific up 5% in Q3. Give us a sense. What are you seeing or what are you expecting when it comes to rail earnings? Are they going to hold on to pricing power? Are these guys the beneficiaries of that port strike where we saw a lot of retailers bring in goods early? I mean, what are you expecting overall?
Thanks, Fred. That's a great setup on rails. So with rails, there's no question. We saw some of this in JB Hunt as well. There was some pull forward of volume because of the East Coast port strikes. Additionally, the U.S. rails benefited from the fact that in Canada, you had some labor disruptions. You had some natural disasters that challenged traffic movements. So traffic was down at the Canadian rails, but higher at the U.S. rails. We think they give some of that back here in fourth quarter. But frankly, the rails have always been able to assert pricing power. So we're looking for the rails to kind of reassert some of that pricing strength as contracts reset next year. We think that's generally positive for the rails. I'm not sure we're so excited on what third quarter necessarily brings. But again, as we look to 2025, it's kind of a similar story as we see across transports, which is kind of a reset of expectations that we've had. And now as we think about what next year looks like, and especially 2026, we really start to get excited about the earnings upside potential.
All right, so we're going to have some trucking earnings coming up as well. By the way, you had a note out last week with an initiation of 19 names. One trucking company was in there, LTL trucker, Saia. I'm just looking at trucking rates right now. So they're basically flat year over year, according to latest data from Evercore. 11% lower than they were in 2022 and 22% lower than they were back in 2021, when in all fairness, rates kind of hit their peak. In your mind, the fact that we're essentially flat year over year, is this a sign that we've bottomed? Are we starting to see the end of that freight recession that everybody talks about?
Yeah, so LTL stocks are a little bit of a different animal, right? They kind of participate in this subsector of trucking, higher barriers to entry, a little bit more pricing power. So pricing has been flat at the LTLs, but it's actually been negative if you look at the truckload carriers, right? So those are actually the bigger names that participate in the broader trucking sector. That would be like JB Hunt and Knight-Swift and Werner. If you look at companies like Saia, historically, they've been very good at exerting pricing power. The industry structure kind of creates these high barriers to entry that allows them to have a little more negotiating leverage with their customers. They've kind of been able to hold things flat here as we've been in this freight recession. But we think, again, as capacity kind of tightens up, and especially if you see industrial production start to pick up a little bit, we think the pricing leverage that some of these guys could exert could be pretty powerful.